just when you thought it was safe to come in out of the water, I mean, go back into the water. I don't know what I'm saying. Just when you thought it was safe to jump back in the water, we've got the kind of week coming up that we've got coming up, and boy, it's going to be hard to know what to do. So let's talk about the Fed. We're going to talk about the PCE, which comes out on Friday. We're going to talk about all the companies that are reporting this week. We will talk about what all of this might have to do with Tesla. And then taking a chance on my reputation for being right on for the last few weeks with regard to the Tesla share price, I'm going to risk it all and tell you where I think Tesla is headed this week. All right, this is Randy Kirk. If you like this Sunday night report, please hit the like button and then hit subscribe and notify. There's going to be all kinds of reporting all week long as we go through this mess. You're going to want to be with me every single morning at 7:10 when I come out every day and give my analysis of where we are in the morning and where I think we're going to go on that day. So, please hit subscribe for that. And then obviously Patreon, trying to get to 100. I think I hit past 76 today. So we still have a shot. We've got 7 days to go, 8 days to go. See if I can get to 100 by the end of the month. Okay, love to have you on board. And I have just posted a bunch of new spreadsheets giving my analysis of all the different divisions of Tesla between now and the end of the decade. All right. So what do we got happening this week? Well, man, we got reports after reports after reports. Let me go through them real quick here. On Monday, the only thing we've got is the S&P Flash Manufacturing PMI and the Flash Services PMI. Both of those are expected to be, well, actually, the manufacturing is slated to be up just a little bit compared to last month, and the services down a little bit. That's a little odd. Given that the services has been running away and manufacturing seems to be slipping. So that'll be really kind of interesting to watch. I'm not sure it's going to affect the market at all unless both of them were up substantially. That could cause the market to start to worry, obviously, about another Fed increase in September. On Tuesday, we've got the Case-Shiller Home Price Index. This will be important, okay? It's showing that it's going to be down 1.6 compared to last month, down 1.7. This should be evidence to the Fed. Don't know why it isn't, but it should be evidence to the Fed that housing is in fact sliding. It's not just Case-Shiller, it's every single place that you can find an analysis of housing is showing it's down, except for the CPI. And the CPI is showing that it's still going up. And that this is the big concern that they have. It's the biggest category. And so therefore it's affecting their decision by a larger percent than usual. You've already heard me rail on this before. You can't get this housing market to lower the prices until we get more supply. And there's not going to be more supply for years. And there's not going to be any more supply until the interest rates go down so that the builders can start getting the money together, feel like they can afford to borrow the money to begin to start building some houses and feel like consumers are going to be able to afford them. It's just not going to happen. So I don't know what the Fed expects out of this. All right, moving on. Sorry for my additional rant on that subject. For those of you who are new, you probably haven't heard it before. Okay. On Tuesday, we have initial jobless claims coming in, showing that it'll be a little higher than last week. That would be good. That would be helpful to the Fed's decision on Wednesday. We have durable goods orders also coming in that morning before the market opens. Those are showing down, well, up 1.2, but that's compared to up 1.7 last month. That would be, again, helpful to the Fed to see that being more restrained. When you do the same thing minus transportation, it's showing flat line from last month. Now, again, these could be much higher, and that would cause the Fed to be, everybody be more concerned that the Fed would need more interest rates increases during the rest of this year. So we would hope that they would come in no higher than these numbers as we get into the week. Then we've got the gross domestic product advance report. Last month, it was showing at 2.0. Right now, it's showing at 1.7. That's still a pretty strong economy. The Fed thinks that the economy is going to come in closer to 1.1 or 1 or maybe even under 1. I think 1.7 makes sense. Could come in lower. We'll see what happens. Again, if it comes in much stronger than that, let's say if it came at a 2 or 2.1, that would be a bad signal. Although the market right now tends to be looking past the Fed, tends to be looking past interest rate, tends to be looking past inflation, but you don't want the Fed to have lots and lots of reasons to increase in September, or that will kill this second leg of the bull. Then we have U.S. trade balance and goods showing flat compared to down last month in terms of what the street believes. And then advanced retail inventories also showing flat compared to up last month. Very interesting things to watch this week. I'll be bringing those to you every morning as we have in the past. Then we have on Wednesday, of course, the big thing on Wednesday is the Federal Reserve making the decisions with regard to interest rates. But prior to that, at 7 o'clock in the morning Eastern, we'll have new home sales. That's expected to come in much lower, which I guess the Fed would like that. I don't know why they would like that, but new home sales are dramatically lower than they've been in years. Because why? Because there's no inventory. There's a fraction of the inventory that was on the market prior to the COVID virus hitting, and those were historic lows. There's like nobody selling. Why is nobody selling? I'm going to repeat this again for new people. Nobody is selling because everybody's sitting on under 5% interest rates. A lot of people, like I am, sitting on 3% interest rates. Why am I going to sell the house at a 3% when I've got a 3% mortgage and go buy another house at a 7% mortgage? Makes no sense. I don't know why the Fed can't figure this out. You tell me in the information below. However, that's where we're sitting, and they're talking about new home sales down to 717,000. That would be very, very low. All right, federal decision coming at 2 o'clock Eastern time, and then the Chairman Powell's press conference a half an hour later. Nobody is going to be surprised. There's no chance it's not going to be a 25 basis point hike when the Fed makes their decision. If it's not, the market will go crazy on Thursday. And then Powell's going to speak, and what we're looking for is some dovishness in the comments. If he says, no, we're still, everybody on the board is talking about we need at least one more increase and maybe even two more increases this year, that will flatten the market for at least a few days. If he says, well, we're open, we're willing to listen, we're going to watch the numbers and see what happens, then the market will be happy and the second leg of the bull will be secure. This press conference on Wednesday afternoon is the most critical information of the week. All right, then on Thursday, we have initial jobless claims. That's expected to be higher than last week. Well, last week was a surprise low. So we'll be interested to see what happens on this week if it is back up again. Suggested number is 236, which was the expected number last week, but it came in at 228. Durable goods orders are also now showing lower than, this is again, the street's prediction, lower than last month. That would be good for the Fed, but it'd be too late. But well, yeah, it'd be too late. It'd be on Thursday. It'll be helpful for the Fed for next time, for September. Now remember, there is no Fed meeting in August. The next one is in September. Durable goods minus transportation comes in. I'm sorry, I am repeating. Need to break this. Happened here. So then we'll have gross domestic product, the advanced report, and this will, again, all these will be too late for the Fed to make a decision this time, but the GDP advanced report is showing only 1.7% increase. I have been feeling like the GDP would be right around these numbers. That was what I would expect. Last month it was showing 2%. Now it's 1.7. The Fed thinks it's going to be 1.1, even 1%. But it feels like more than that. I don't really have any special information to be able to make that call. Advanced U.S. trade balance in goods showing flat. Advanced retail inventories showing flat. Advanced wholesale inventories are actually. I wonder if I should just start over.